Hello and welcome to another episode of Monday Markets. As always, we're brought to you by Woo. Links available in the description below. They have an ambassador exclusive trading competition going on, so the pool of participants isn't that big. It's sort of the existing shills, and we are one of them. And you can see there's a $5,000 prize pool, and if you probably don't blow up your account, you can get up there and win some portion of this, or lose it, because that's how trading works. But anyway, if you were thinking about trying the exchange, or if you signed up already, there is something that you could win by not blowing up. So be sure to check that out if that's interesting. Otherwise, let's get straight into it. Now, monthly close has 4 days left. I would quite like a close above previous month's high. Because then we could make the argument that this monthly is a bullish engulfing. That is to say, a spike below previous month's low and a close above previous month's high. That would be a decent sort of bullish signal within this 2-3 month consolidation, and to me would suggest that we're ready for a push towards monthly resistance at 35k. So for a while we've sort of been somewhat dismissive of the monthly because resistance at 35 and support at 24, and we've been sort of chopping in the middle. So it'd be nice to get some sense of indication from the monthly, and I think a decent signal would be a monthly engulfing or a sort of a close above previous month's high. That would suggest a retest of resistance is more likely than a retest of support, and would also turn, I think, this down month into a form of monthly structure worth looking out for in the future. So that's sort of where my mind is with the monthly. Now, the weekly, as we discussed at length, was drifting and drifting and drifting, and then it's sort of this sort of XRP-esque style candle where 1 week wipes out sort of months of a trend. That's a pretty big deal. This is a very kind of significant sign of strength. I wouldn't trivialize how important this is, but it's important now that it doesn't bleed out. So if this is going to be the type of structure which is ultimately corrective in nature, which is to say we've had an impulse like on this leg here, and then this ended up being the consolidation after the impulse, and then you have an impulse here, and then you had a bit of a down-sloping consolidation. If this is the impulse, once again, the market really needs to get going. And so what I don't want to see is after a large, especially news-driven move like this, for the market to just start to bleed out, and we're looking for supports all the way down. I don't want to see that. I think I sort of tacitly accept that 30k is still a bit of a tricky area in terms of weekly structure and resistance. You can see that on the weekly. You can see on the daily, the market is sort of trading back within this consolidation. So we're very much in a sort of purely technical area of resistance, but I still give a fair bit of weight to the magnitude of this breakout. So I'm happy to sort of position for continuation as long as it doesn't pull back too deeply. So if you look at this sort of weekly chart, and you might want to outline, for example, this 28k level of support, which is quite reasonable from a market structure point of view. It was the high before the lower low, sort of higher high made, and so it makes sense for the market to bounce there. But I think at that point, if we pull back all the way to 28k, the amount of momentum that we would be giving back would certainly make it less attractive as a narrative-driven continuation play. And I just think, especially if it does it so soon, like big breakout week, and then the very next week just starts to bleed, that's a sort of sign of weakness more than is a sign of strength. So given this how this weekly looks, sort of how do we resolve the tension between a strong-looking breakout, but the strong-looking breakout taking place in an area of resistance? And I think the way you reconcile for that is to only be willing to buy shallow pullbacks, but not deep pullbacks. Shallow pullbacks suggesting that buyers are still in the market, and deep pullbacks would suggest that the whole thing is retracing, so I prefer the former to the latter. Which of course begs the question, what is a reasonable level for a shallow pullback on BTC? I think if we look on the weekly, this sort of lower high from 29k is, I think, a reasonable level, because if we look on the daily, that seems to capture an important sort of area of price action from the former range high. We've had some lows here before the breakdown, a bunch of resistance, and then we just blasted straight through it. So I think if you're going to be making any semblance of sort of the argument for strength in this market based on a shallow pullback, I think shallow pullbacks are acceptable as long as ultimately they hold some version of 29k. And yes, it can sort of do the classic price action stuff, like dip below this low and see who's hanging out, but ultimately I think this needs to stay close to 30k and above 29k if it's going to be bullish, right? So I think this is sort of where my laser focus is in terms of levels from the higher time frames coming into this week. And you can see even on the 4 hour, a lot of this, the market's currently testing the pre-breakout consolidation. But if it were to sort of poke and prod lower, especially below the sort of lows built up in this range, maybe even this one, there is a decent high time frame shelf there that I'm interested in from a structural point of view. And again, the 4 hour makes it really clear this is an important level. We blasted through it here, no resistance, so perhaps we can expect it to act as support if the market is strong. Another reason that deep pullbacks won't be particularly palatable is if we look on the daily time frame. So on the weekly, for example, you just have the spike at the high, which I don't think is too scary on its own quite yet, but we are at the range high. I think it says that much. If we look on the daily, Very much the same picture, sort of April's high here, spiked it, and we're sort of stuck here, right? If it starts to go significantly further down and start to break down, so for example, we outlined that 29K is a decent higher time frame line in the sand, but for example, if it starts to puke through 29K, you have to imagine what the chart would look like here. At that point, everyone and their grandmother would be making not an unreasonable argument that we've come into April's high, we've rejected it, and then we broke daily market structure, and now it looks like a big old deviation here, with the target being, I mean, God knows, right, the other side of the range maybe, or at worst the midpoint at 28K, but both the sort of charts and the narratives and sentiment more specifically would start to shift quite radically. So I'm in this type of regime now where I'm not too worried on its own terms about the sort of spike of the highs, so long as the spike of the highs doesn't lead to a full breakdown. And my definition for leading to a full breakdown is anything that gets stuffed below 29K. Okay, so this is a bit of a dodgy zone where you've got where the market is right now, where you've got the range high at 30.31, and then your support is a bit lower at 29-ish, and this is more sort of low time frame diddling in the middle. But if you're looking, given this is a weekly show, we kind of have to focus on the higher time frames. I think obviously if it breaks up, that's your high probability signal, unless it turns into one of these. But generally, you know, higher would mean I'm looking for monthly support as being, monthly resistance as the next level to be tested. I'm happy to give it a last chance bounce type of thing, anywhere up to 29. Anything below 29, I think, would make the bulls sweat, and certainly for me would offer a short to mid-term bearish bias that this spike is significant, daily break in market structure, and look for sort of rotations lower, unfortunately. Okay. My prevailing view, just gut feeling wise, because it's one thing to have a gut feeling, another thing to put a trade on and have a setup. My gut feeling is that this weekly breakout is significant, and yeah, that's it. I sort of give more weight to that rather than more weight to 30K. But absent a setup, that sort of gut instinct doesn't mean much. So hopefully that makes sense for BTC. The summary is essentially weekly is good, but is that resistance? How do we reconcile that? We reconcile that by only allowing shallow dips to prove their strength. Where is the maximum point of depth in terms of shallow dips? So how deep can it go before it looks bad? And I think for me, that's around 29K. Hopefully that's helpful. Let me know in the comments if it was a bit too obtuse. As far as ETH goes, it looks a bit whack on the daily time frame. The issue with these is we've sort of solved the price of ETH, right? It's sort of 1930 seems like fair value, or at least maybe a bit above it, given how much it's acting as resistance. But I think in terms of weekly swing trade signals, to the upside at the very least, anything above 1930 on the weekly close would be a decent one towards 2500. And so that's plenty of space to capture. That's good. It seems like 1930 isn't letting up yet. It's still where the market is getting stuffed. So I think at this point, waiting for weekly strength through that would make sense. And even on the daily time frame, we just see these odd-looking wicks still stuffed at this same sort of messy pre-breakout level. And similar to BTC, you know, if you sort of just zoom out, it's like, is it at the range high? Yes. Same with BTC. Okay, fine. If we apply the same logic to ETH, i.e. ask the question of what's the maximum pullback level before the chart starts to look like shit, I think for me, that's the cluster we were speaking about last Monday at around 1800-ish, 1820 to 1790, however you want to pass it. This big shelf for support still makes sense to me. It's a nice level. You know, previous support market was really strong, blasted it similar to BTC at 28K and didn't provide resistance. If the market's going to be strong, this shouldn't become a deviation, right? If the market's strong, that should be your higher low of sorts, and then potentially higher into at least 1930, which we know is fair value for ETH. But yeah, in terms of focus on ETH, I think my range low is around here, sort of 1800 as the last reasonable place for the market to pull back. Higher time frame resistance at 1930, and sort of the local daily version of that is 1910. Okay, so this is essentially what we're dealing with, and similar sort of implications for ETH, i.e. if it breaks below 1800, this whole thing starts to look like a deviation and the whole thing looks rough. Okay, so I think 28k BTC and sort of 1800 ETH, if the market is strong and has legs, shouldn't be violating those and closing or getting accepted below those on the daily time frame. That said, the ETH chart does come with the proviso that ETH BTC looks like this. It looks pretty weak. Even yesterday, after sort of the breakthrough these lows, it looks like all we could muster was a retest before lower. If this turns into some sort of weekly, maybe even daily swing failure through these lows, maybe there is some sort of argument for, I don't know, some sort of bounce. The issue is the narratives and flows are extremely Bitcoin-centric, given the BlackRock ETF. So I'm not in any rush to ignore that, especially if the ETH BTC chart is going to be looking like this. Okay, so technical levels pretty good on ETH. Narratively and ETH BTC not as favorable, so I'd prefer to be taking, at least on the long side, BTC setups over ETH setups if they form, and on the short side, ETH setups over BTC setups if they form. I hope that makes sense. Final bit of commentary, probably on Legacy. Not much else going on. Monthly is still sort of battling at the midpoint of this larger monthly cluster. I think this is the one we had on last time. Nice weekly close around there. I think as long as crypto stays strong, I know I'm saying the irony of saying this when the watch list is entirely red, but generally speaking, if crypto can basically keep up with itself and not collapse on itself, I don't think the legacy correlations matter too much, unless legacy just completely rugs and just mega pukes through this cluster and starts rotating lower, then it would be of some concern. But at least for this week, given this is a weekly show, I think it's worth looking at BTC and ETH somewhat on their own terms, not least because the S&P isn't going to tell us anything new, that it's pulling back from resistance. You're not going to be getting super bullish arguments there anyway. Crypto kind of has to come through on its own, because I don't think we're getting any safety from this lot anytime soon. Okay? Any lower time frame stuff I want to talk about? No, not really. Not for my money. I think, and anyway, look, for example, this is our daily level on BTC, and this is what the 4-hour chart looks like. You can sort of extrapolate and get very similar levels across all time frames. That's why I like higher time frame charts, because even if you're a lower time frame trader, if your high time frame levels are good, they will show up on lower time frames. You can just refine or trade them accordingly if you need to. Okay, that's all from me. Hopefully that makes sense and that was helpful. Leave me a comment if it wasn't. As always, likes and subscriptions are also appreciated. The channel's been growing recently, for which we're very grateful. And thank you to Woo for supporting the show. If you want to support us, at least check them out, read the article, see if it's for you, and maybe go win a trading competition. That would be nice if our audience could do it instead of the other, sponsors, affiliates, whatever. I'm going to shut up. Have a wonderful week, and I will see you for the newsletter tomorrow at trletter.com. Goodbye.